It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 10, 11, 12. That is the date. Doesn't happen very often. In fact, doesn't happen very often at all. And what's even more important about the date is that we finally got up right there on TFNN to be on the front page. The webinar, the 2-day webinar that'll be in December, that'll be level 1. You know, there's just a chunk of stuff that we go through. First of all, you get the CD introducing ChapmanWave methodology. That gets sent to you as soon as you sign up for it. And most important about that is that you get the CD, but you also have the webinar, and webinar on the moving averages. Now, about the Trader Master Series Trader 2-day session is that within the session itself, I like to go through just the absolute nitty-gritties. And in this particular one now, I'm going to not only have you practice it, I'm going to actually want to see those charts. I'm going to have to ask you about them. I want you to know how to draw trend lines. I want you to be able to recognize different identification markers, whether they're candles, whether they're round numbers, whether they are those little things that I talk about that are just nuances that accumulate. They sit in the back of your mind so that you don't need them all the time. It's like this huge toolbox that I have. Do I need to have the drill ready? No, I need it only when I need to drill a hole to be able to put in a nail or something. Really, it's important to be able to decipher, to analyze the markets. What I'm going to do in Larry's show, I'm going to do Larry's show today. I managed to free some time up. It's my pleasure to be able to do the 12 o'clock to 1 o'clock hour as well, the commodities hour, the futures hour that Larry usually does. It's the way this week. And I'm going to go through some things that, because I've got the white charts, it'll be completely fresh. We'll just I'll do them fresh right in front of you and show you how many times you get to that peak D, the fourth highest peak. It's a forward-looking indicator. It's just a great thing. On the downside, we use the 9-period exponential moving average as a resistance line. Just a chunk of things going on. Hey, let's go through the numbers. The Dow's up 63 at 13,408. The S&P's up 10, almost 11 at 1443. Now, all day there's been a big differential between the S&P and the Dow. The S&P is up 65.65%, and the Dow's only up 47. It was actually way worse earlier on. It's getting a little bit better. Now, we've seen this for about, I think it's about 2.5, maybe 3 months, that it's becoming more frequent, but it happened periodically. Now it's almost every other session or every 2-3 sessions, you've got this huge divergence. And what it's telling you is that the market is struggling. It's having a tough time because fewer and fewer stocks are making new highs. No, I'll have to check that out, the new high and the new low list. But I meant to say sound like a politician. I meant to say fewer and fewer stocks are leading on the upside. That's really what I meant to say. Hey, let's just finish this, and I'll talk not politics, but I'll talk about the debate tonight. The gold is up 8 at 1773. I still think gold is struggling. That's my read on gold. I think that a limited upside, possibly limited downside, but even more important than that, what I'm looking at and what I'm really looking at is what happens going into probably Friday, not this Friday, but Friday a week. What happens in that particular instance? Where are we in the 3 bears? The VIXI, Bondi, and Dolly. That's the VIX index, the dollar index, and the bonds. Why? They didn't really participate. You know, that was a very hard knock that the market took over the last couple of days. And basically, we're looking at kind of ho-hum in the TLT. TLT's at 122.32, down 49 cents. It should be, today, it should have been at about 123.10. Or at least over 123.80. I'm sorry, at least should have been over 123.80. possibly even going to 124.10. And right now it's at 122.32. But it's not, it hasn't been breaking down. That's the Fed. That's what I talk about when I say the dollar is, for years, we've been looking at dollar rallies being pathetic. And my reasoning is that it's like in quicksand. It's really doing a great amount of energy. It's usurping energy. You don't see it because the Fed or some government agency or person has been behind keeping the dollar weak because it's good for the trade deficit. And the trade deficit is expanding, which really shows you how bad, the actual partnering of exports and imports is working. So I'm watching that really closely. And the volatility index didn't even go over 1706, the high just recently in the 120-minute chart. So, and the dollar had a very nice rally, went to leg E, but it failed under its 200-period moving average. So let's go through the rest. We're looking at silver up 9 cents to 34.20. Platinum. Now, I'm going to do this in Larry's show because that's the futures and commodities. So I'm going to put down here PL at PL.P. I'm going to look at a whole bunch, orange juice, just rice, lean hogs. We're going to look at a whole bunch of things in that hour. So now let's look at this. On my chart, if you're looking at Tiger 1, if you're looking at the charts that I'm showing right now with a white background, I'm trying my best. Believe me, I'm actually learning a lot with this white background because I'm able to put in very quickly shadings, areas of support and resistance, etc. And look how it's worked so beautifully. Look at you see this gray ground. I haven't got it up yet. The gray section at the bottom and the pink. I don't know if it's coming out pink in the charts. How it shows. Look at this. It gave you that whole topping area. It gave you that inverted V-shaped pattern. The white section was the middle section. It just sliced right through it. Now what's interesting is look at the left side, right side price time match. This is what I'm going to teach. My level 2 all day, not a webinar, but a live session at Babson, over at Babson, what they call it, Executive Conference Center in Wellesley, Mass. Fabulous center. And I always say, fabulous food. In fact, we usually go there when we go at lunchtime, we just grab whatever we can. We sit there, we have great meals. And then when we get to dessert, we go right back to our room with the huge screen. I always have a screen because I like to, I don't like the computer. I want to get as big a screen as possible. With the monitor, with the monitor, you don't quite get the expansiveness. So we get this and we walk around the room and we look at it. Yes, you can see it. Okay. At the top, mine's pink, but this has come out sort of gray. And at the bottom, I don't really want to make it too dark. I'll make it a little darker for now, fill color. And I'll make it just so that I can see how it's coming out. Just a little darker there. That's too dark. But anyway, let's see what happens there. Now, what's very interesting about what's going on right now is that we've got the debate coming up tonight. Do you realize that this could be, yes, you can see it now. It's much darker. It's a little too dark, but I just wanted to show it. This is the E-mini that I show my subscribers in my opening call. Every single day you get your 6 or 8, 9, or I don't know how many charts it is. And with the final thing being the Trader's Corner, but be early in the morning, somewhere between 6:30, 7 o'clock, 7:30. I send out the 120-minute chart, which you're looking at right now. If I can, I usually show the daily as well. And in this case, the daily is it's either A, B, C, peak C on the daily, which should try at least attempt to make at least 25 cents above 1439.25 for D. We'll see if that can happen. But most importantly, you've get into that area of resistance. And what I was saying is, in the charts, you've got, see that there? I'm going to make that kind of a spotted line. That is your 200-period exponential moving average. Now, it looks really busy. But all of this underneath it, I'm circling. That's the MACD and the slow stochastic. I like to keep that big. So it takes away from the chart a little bit. But I'm showing you, if you semi-close your eyes, look at the swoop. And that's what I teach. I teach about the swoop of the fast-moving average. I teach about deflecting. Look here. This is what's called a deflection. It didn't inflect higher. Instead, it deflected lower. It got bumped to the back to the downside. And that's important because that's where you got your failure. You see the stochastic, how quickly it came down. I talk about candles. I talk about all this. Everything is very important in my work. But the simplicity of this, of a peak A to B to C to D is what I will discuss. I'll do it in Larry's session because there's so much I want to do right now. So skip that. Here we go. Now look at this. When I go to... This is what I show my subscribers every day. I give an overview and market today section. And it shows the nitty-gritties intraday, but at the same time, I'm looking at the big picture. And what I was showing is that the 200-period exponential moving average in the 120-minute chart, which I've just given a little spotted line, look how it hit it exactly. Exactly at 13,325. Yesterday, the low was 13,327. Missed it by 2 points. Didn't touch it by 2 points. Yeah, I mean, this is amazing. And that was a peak E top. You remember I had already circled that yellow line. It went yellow area. That's exactly where it went. It was an alternate count E/C. I'll teach about the alternate counts. I'll teach why at a certain point, all you need to do is raise your stop because the market will tell you if it's still strong, the alternate count will continue with its A, capital A, B, C, whatever it is. If it's weak, you will have that alternate letter and plop, you come down. And then you just trade accordingly. Now look at this. I explained that the VIX index only went to 16.79, but the last move when the Dow was going down to 13,367, you had a peak C1, C2. I'm going to teach that as well, what that means. Double top at 1708. And yet this time we didn't even go higher in the VIX. The VIX should have been about 1730 to almost 1820 with the deep sell-off that we saw. So now the VIX is pulling back, taking a breather, but it's quite a deep breather. And as long as the volatility is low, and as long as TLT is not in the 123.80s, but in the 122, where is it now, 40s, that says two of the three very important tools, indicators, are not participating as you would expect them to. The dollar went to a peak E at today and is not holding it. It's just failing to hold it. Stochastic's way below the 80% to 64%. Do you see what we're looking at here? We're looking at a bifurcated market. Implication being certain stocks are still able to hold up because money managers are still doing the buying. They're not going anywhere, and therefore you've got to be somewhat cautious and say, let the market tell me. Now, we're going to go to a break. I'm going to talk about, I'll just quickly show the TLT as we're going out here to the break, and then I'm going to talk about another technique that I use. It's called the rogue wave, and I discussed it yesterday, and we'll see if Costco is making a rogue wave. There's the TLT as we're going to the break. I'll talk about Costco when we get back. 877-927-6648. Love to hear from you.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. Basil Chapman, 877-927-6648. I'm going to try again. International folks, I know you're out there because I get emails, I get questions. I'd love to hear from you at 1727-445-1044. Now, the bonds. Look at the bonds. This is a 120-minute chart. The previous low of 120.66 on the 21st of August made a left side, right side price time match that went right down and then pierced in a shorter time period the low of 120.27 and broke down and went all the way down to 118.05 on the TLT, the Lehman 20-year Treasury Bond Fund. But it ran up in two peak Ds. It actually went to an E, but there's that technique again. Beautiful kind of silent doji that was made back on the 14th of September, and it heads all the way up from a low of 118.05. Let me type that in, 118.05. And what does it do? It pushes all the way up. It walks the 9-period moving average. That's this red, the maroon line that you can see right there. I'm going to highlight that. And it walks it and goes higher and higher and higher until it gets to a peak E. Well, it goes to a doji D. And it pulls back, holds the line, and has one quick bounce up to 125.24. And what does it do at that point? It starts to pull back, and it turns the 9-period exponential moving average as the MACD's fast-moving average is now above the slow. As the MACD's fast-moving average is below the slow-moving average, green under red, And it slides all the way down to where, and this is what I'll be teaching in my courses, where can you find support levels? What can you do? Which candles? What cluster formation? What trough? What peak? What's the relationship? Why on earth? How does it know to go back? The last trough at 120.67 at 11:30 on the 21st of September, weeks later, on the 5th of October, it goes to 120.92 and tries to rally from there. Now, bonds can move very quickly. They can go very slowly, or they can go very, very quickly. Question in the den. Diogenes says, will bonds rally after lunch and stocks take a hit like yesterday? Well, all I can say is we don't know, but all I would look for is if the TLT breaks above 122.96, it's at 122.41 right now, down 40 cents. If it takes that and it uses that momentum and the MACD stays above 82, 83% or even higher, that would say very quickly the 124.08 could become a target. Otherwise, it's just going to be in this trading formation and kind of retest the low of 10 of yesterday of 121.47. So we're looking at probabilities. You know, like Steve likes to talk about the probabilities. Oh, Steve's giving a course on candlestick formation. You know, I love the way Steve goes about embracing all these different techniques to be able to come up with something that is his own. So that's coming up Friday a week. Friday a week, and I recommend go to the front page of TFNN, check it out, and if you start putting together the different techniques, you will have a package that is just superior to what you have now. Why? Because you'll be able to sift out. You know, it's when someone talks, there are certain words, certain things that just ring a bell in your mind, and then you move on to other things, and you don't hear 90%, but 10%, maybe 5% just kind of stuck there. That's what when I teach, that's what I like to pick up from attendees. I like to know immediately that somebody's got this. Oh, they've learned the methodology of counting the higher peaks. Oh, they've learned the methodology on the way down. It's the troughs that are important, but the technicals are even more important, or the chart patterns. How you can use inverse, like the DOG to the DIA. The DOG is 100% short the Dow, and the diamonds are the 100% long the Dow. So how you can use them as inverse. I always have them. Look right here. You can just look at any of my charts and you'll see them sitting there. Look at this. This is the right there. I haven't notated these for a while, but you can see as the Dow, the diamonds were going up, so the DOG was coming down. And actually the DOG is about 75 to 80% of the Dow. Look, right now it's down 35%, and the Dow is up 0.47. Oh, no, it's up 0.35%. Okay, well, that's a coincidence. Sometimes you'll find that the DDM or the DDX will, the DXD, sorry, will, the 200% will be much closer, because you need all 30 stocks to really power higher or power lower to get that exact 200% difference. So, all right, so we've got a break coming up. I haven't finished because I want to talk a little bit about tonight and what it means and how it will impact the market, how I think it might impact the market, and what I think would be appropriate things for them to say. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, 877-927-6648. Now, actually, I'm going to make it even shorter than I was going to. It's what the market does tomorrow in response to the debate. But I think Biden, for many years, the perception has been that the Democrats avoided doing actually giving extra money to the military, to defense, and we're always ready to cut. So that's an area that Biden might seem to be weak on, but in fact, he and his wife, he's got 2 sons in the, I'm not sure if they're in the army, but they're serving the country. And he can it will be very easy for him to just constantly bring up what they're doing, how they're helping, how they're doing what they're doing in the VA and all that sort of thing, which they are. So those are important points. And with Ryan, it really is easy for him to bring up the budget. That's his thing. So he should stick with that budget. He knows it backwards and forwards in his own perspective, and that's really important after all. What is this about? And he can mention that, there's been no budget for 3 years. Never. When last was there no budget? Even if the budget wasn't observed, there was a budget that was sent up for consideration, and even the Democrats didn't completely vetoed Obama's budget proposal when it did come up. So there are really areas that they can talk about that are their own specialty. What is going to become very important is if Ryan brings up the discrepancy between reports over this last incident where we lost our ambassador. And so that's an area, but it's a delicate area. So this is going to be really interesting because Ryan's never done a debate that I can recall. He's done thousands of interviews, but hundreds and hundreds of interviews, but it's where he's either with people that he's comfortable with or where he's able to go on for quite a while discussing it, and you can have charts and you can show things. And that's a little different to being on the spot in a very glaring spotlight right now, because this is going to be a fairly important, more important than usual with vice presidents, of potential vice president-elect positions. Now, here's another thing. We know that Biden, it's real easy for him just to kind of go off at a tangent. And it's very easy for him to overspeak. But at the same time, it's also very difficult for Ryan to not overspeak. So how, and the setting is completely, setting is with friendly people on either side asking questions. I think that's the way it's going to be. So I'm rather intrigued. I'm not interested so much in the debate. I want to see tomorrow at 10:15 in the morning, what is the market's perception? Here's the big thing. If the perception becomes that the Romney-Ryan team now has a very good chance, unless something spectacular happens to the Obama-Biden team, then all of a sudden you've got this huge unknown about Bernanke. So this is not the three Bs with Bach, Beethoven, and Brahms. This is the three Bs with Bernanke, bonds, and perception. Well, it should be perception. So we're going to be watching, I'm going to be watching this really closely. And here's another thing. I'm showing a chart here of natural gas. I'm going to do more of this in Larry's show because it's more appropriate there. I didn't have a trade on. You remember I had a call from Marie. Was it in Erie? Marie in Erie? Yeah, I think it was. And she was long the UNG. I'll go to that in a moment. And I said there was leg C coming up. And if this is the proof of, this is how fantastic the ChapmanWave methodology is, as if it works in conjunction with the technicals, which is absolutely the way it's working. I said there should be a leg C to the upside. That there's a left side, right side price time match. I wonder if I've got it here on the UNG. I think I drew it. No, I didn't. Yes, there was a little mini left side, right side price time match to the high of 22.42 in the UNG, which is United States Natural Gas Fund, and it was making leg C, and it should bump into the 200-period moving average, and this time go above it to make leg D. And lo and behold, today we have got 2261. We've got not only leg D, we've got leg E. Let me squeeze that so you can see it clear. There. See leg D? Oh, no, this is leg E. Ah, fabulous. Okay, leg D, because there's leg C. And it went above, exactly like that cup formation we were talking about. Look at the previous ones from the trough of the UNG 1425 on the 19th of April. We went to peak A, B, C, D, E. And it made a top at 1976 on the 18th of May. Pulls back sharply. That's what UNG is. This is what natural gas very often does. Goes to 1518 on the 13th of June. And where does it go to? Peak A, B, C, D. Pulls back, holds the 9-period moving average. MACD is still strong. Stochastic is pulling back, which is saying be careful because the next big rally could be difficult. And what does it do? It goes to... on the 31st of July, it goes to 2242. The next day, you get the whopping volume. Now, I'm going to be teaching how I use volume in the Master Trader series, both the level 1 and level 2. I'll be going over. I've done before level 2, but I'll do in much greater detail. Now, look at this. It pulls back to, on the 28th of August, it goes to 1769, goes to ABC, and today it goes to D. Look at the NGZ. The December natural gas. Look at that. peaks here, and I said, if everything stays intact, if it holds the 9-period moving average, stay in the position because it should go to D. And that's where you can take a little bit off, and that's what I'd recommended. And you can put that back on if it drops down from the 388.81 level that it's at now. You can put a little bit more back. Let it see let it test the lip, if it does, of 3.631, the lip of the 31st of July. And now this is the thing that's most interesting of all. Look at what's happening. There's a huge cup formation. It's actually what's called a bowl formation. Or at least I call it a bowl formation because it's much wider or longer than a cup. And if at any point there is a spike that holds about 396, let's call it $4, just for argument's sake. If it can hold, touch $4, pull back, and then go to $4 something, $4 and a penny, I don't care. That will show that natural gas is really close to the weekly breakout to test the very important trend line. Another technique I'll teach about the ChapmanWave Inside Track, and that says that the next level to watch would be 4.09. And that could come in the next 2 weeks, as long as all the technicals are holding very well. What do I mean by the technicals? I mean the MACD, the stochastic, and the 9-period exponential moving average. Those three simple techniques. All right. So there's a question that I had from, did I read about it? Oh, yes. There was a question I had because I'd mentioned Costco. I had mentioned the technique that I call the rogue wave. Now, introducing the ChapmanWave methodology, this is 476 slides. It's in a PowerPoint presentation. There's a particular technique that I use, and it's called the rogue wave. And then what does that mean? What is a rogue wave? Well, a rogue wave is exactly that. You remember that book? What was it? Susan Chase. I'll think of the name in a minute. Susan, it was called The Great Wave. I think it was called The Great Wave. Do I have it up here? Because I wanted to keep that book. In fact, I wanted to call her one of these days to interview her. The Wave, Susan Casey. Just a fantastic book published by Doubleday. And there she talks about a whole bunch of things about those rogue waves out there that go to 120 feet. You've got these guys surfing these waves. They have to be dropped by helicopter with a little ski-doo, whatever you call those things, and then to be able to build up to about 55, 65 miles an hour, to be able to get to the lip of the wave. Then the ski-doo goes zipping along, hopefully successfully, and the surfer goes all the way down. It's just incredible. The waves, there's a couple of incredible surfing waves like that. Well, a rogue wave is where, out of the blue, for no reason, you can't foretell it. There's just one event. Hey, a rogue wave could be the spike that I saw in the Red Sox news that had nothing to do with playing. It had to do with the kiosks and the special booths that were there for the wealthy contributors, the wealthy patrons, to be able to sit in the box. It's just everything. Plus, what's his name? Who one of the Red Sox owners has a hedge fund was losing. It was news everything. That was a rogue wave activity. It was out of the blue. You just suddenly saw, and I'm real close to seeing it in the Patriots. I hope I don't. I just hope I don't. Well, it's out of the blue, and that event comes up, and what it does, if it knocks for a loop all the metrics that you are used to, and then within seconds, it's really within no time at all, it's back to looking normal, depending on the damage that it's caused, but it flattens out. And that's what a rogue wave does. And I like to talk about it in the context of a surprise move in the market where the price rallies very strongly, but at the same time, the technicals were correctly showing that there was a deterioration, and that deterioration said, right there, rogue wave, and that deterioration said that there was a sign at the beach that said high tide at noon, and at 12:08 you're sitting there on your towel right at the edge thinking, well, the tide's going out, and there's this big splash. You look around, but the water's on its way back already. It looks like, yeah, it's going to, where did it come from? Well, that's exactly what happened here to Costco. C-O-S-T. That's my impression. I could be completely wrong about this. I wrote it, I showed. This is what my subscribers get every day. We might not even have a trade in this particular individual stock. I was going to set one up. Everything was there. But I thought, you know what? I'm so busy watching other things. I didn't want to get caught up in a position that could turn out to be wrong for no reason. I had a lot of confidence in it. But to set it up, I just didn't have the time. What I really wanted to do was to buy a put option on it. Well, I didn't. But I set it up and I explained it. So what is the Rogue Wave? The Rogue Wave is a news event that came out after Costco made 103.51 peak D on the 21st of September. The price was falling. The technicals, the MACD was falling. The stochastic was falling. It said that any move to the upside to or above the previous high was bound to break down, or it should. I shouldn't say bound to. My expectation was that it was bound to break down, and that if the price fell, which is what you expect, that the spike yesterday took out all the shorts, it added new longs. I thought, oh my God, Costco's finally breaking out. I've been waiting and waiting, and now it's going, and it gives you just enough time to see people come in. And then it goes underneath, and the moment it goes back underneath, in this case 103.51, it spiked all the way to 104.43. It says, uh-oh, if it closes towards the low of the day, it actually closed at the low of the day, right down at 101.56 was the close, 101.30 was the low. And it continues down the next day, especially under the 9-period moving average. Be careful, because the 99.56 level, the low of the 9th, will be the target. If it takes that out, then the trend line I'm looking at says 98.75 low will be absolutely imperative to hold. You break that, and it's going to walk the diagonal ChapmanWave inside wedge to the downside. It also says don't get too cocky about the short side, because within 3 to 5, maybe 7 sessions, there's a really good chance that it's going to be a pretty darn good rally. But the short side will be the place to be if the stochastic and MACD confirm that it's going lower. So that's my story on the Rogue Wave, and it made a peak D in the 120-minute chart, and it's given that back in what? The Eiffel Tower. This is another technique that I teach, the Eiffel Tower. If you go to my CD introducing the ChapmanWave methodology, and you say find, show me, find, you go to find, you just type in Eiffel Tower, takes you right to, hasn't found it. That's interesting. Oh, it was typed onto the chart. So the Eiffel Tower is where it goes. It's there. It goes straight up, and it comes straight down, and it looks like a capital A or the Eiffel Tower. So a little lesson there. I enjoyed that. I hope you got a lot out of it. We'll see what happened with Costco. And now we want to go to question in the den was NG. How about USO? USO is United States Oil Fund Trust. USO. And that made a peak D top at 37.17. It's having a constant rally. It's at 34.17, only up 33 cents in leg B. Now it looks like peak B. I will go through this as soon as we get back. Very interesting charts. Don't forget, in Larry's show, I'm going to be going through these commodities. I'm going to be going through a number of the chart formations. I'm going to be showing the very long-term patterns that we want to follow.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online, one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman. When I said to subscribers this morning, there's a really good chance that we will see some kind of a doji candle with some activity maybe to the upside early in the morning, and then as the day wears on, the ranges just get smaller and smaller. This is what I do every day. I tell them what to look for, I tell them what particular techniques to use, whether to use the VIX or the Trin or whatever is important, and it's a very comprehensive newsletter. So now what I'm looking at here is that the USO 120-minute chart has bumped up against the 34.59 resistance, the 200-period exponential moving average. That's here. Maybe I'm going to make it a little thicker so that you can see it. Style, just make it a little thicker. There it is. So that says that the range, there should be a leg D to the upside in the next day or so. But that would take you to 34.71 or higher. And at that point, you got a lot of resistance, and that candle of resistance is 34.96, which is the high of the gap down from the previous day, where 35.57. So the previous day, yeah, 35.46 was the low. So that pink area that I'm showing there that you can see, that's the area of greatest resistance. But it could be making an arch formation, a cup formation. But it took this extra sideways move. The sideways move says, be careful, because this is the pattern of the dreaded H. I don't want to show that in my CD introducing the ChapmanWave methodology, but this is the pattern we look for. Straight down on the left side creates the back of the letter H, like a chair, and then you've got your little oval, your arch formation. That's the H, the lowercase h. Here comes the other one. This is the M pattern that's forming. So I don't see that much on the upside for crude oil, and that's going to, it's like a tax break not to get crude oil going higher but going lower. So that's going to be very important. Now, in the remaining time that we have, because I'll follow up, I want to go into more detail in the currencies and everything. I'm going to do that in the next hour when I do Larry's show. Let me show you what I'm looking at in the Dow. I'm going to go to the chart that I had right here. This is my show that I show my subscribers every single day. Overview and market today. Having bounced off the 200-period exponential moving average, the Dow says 13,325 is a magnet. It can go below, but there's a chance it's going to try to come back there at some point. It also says that the volatility index in the mid-teens at 15.74 is still showing some internal buying strength. Number one. Number two, if in the next 3 to 4 sessions, if all of a sudden we talk about this Bernanke uncertainty, the 3 Bs, Bernanke bonds and bifurcation, let's call it bifurcation, you will see something very different. You'll see that the VIX has suddenly jumped over 17.08 into the 1720s, and there is selling pressure. If, on the other hand, it remains in this area between 1620 maybe and 1470, 1460, that just says, hey, that's a nice cushion. The selling pressure is not coming from internal buying. There could be other events or certain stocks. More importantly, you see the trend line that's occurred here. I've got a peak F-top now in the Dow at 13,661. Oh, certainly you can have a brand new buy mode, but it says be careful because you've broken key long-term support. Look at the support that you've broken. Now look at the S&P. Also a peak F-top. I've got unity there, the cup formation, double top formation. That says if you close like the Dow and the S&P, when you close below the left side, the bottom of the cup, you've got to be really careful that you don't make a one-to-one price move to the downside. That's a drop bucket formation. Look what I mean. You see that? It's like an upside down dreaded H. See there? And you see there? If you're looking at Tiger 1. So you've got this left side from the 12,977 all the way to the high of 13,653. So here's what to look for. We'll see tomorrow. I'll be back. But in the meantime, look for this. In the next, by tomorrow at 10 o'clock, if the Dow is under 13,250, that says be careful, but you want to see the TLT right into the 123s. If on the other hand there's a pullback in the VIX, the Dow could go to 13,400.